Good evening, everyone. Time for another silver update. Please bear with me here. This is the first silver update on this new Twitch streaming box with the 1080p and the new microphone. So, still working the kinks and the bugs out. This is the monthly chart of the Dow 30 Industrial Index. You can see a couple of things that I've drawn in here. We've got the trend channel. The major trend channel goes back to about 1994, where we had that run from about 3,000 all the way up to 12,500, so tripling. And then this has been the major trend channel for all of those years, a good 20 years. You can see that we're reaching the top of this channel. We're also reaching the top of the MACD. This is the oversold point that we reached at the dot-com bubble and then subsequent crash. This is the peak of the 2008 financial crisis and crash, and this is where we are rolling over right now. So we're going to get back to that when we look at the labor farce, I'll call it. And we just had that report where here's the Bloomberg article on it. Hiring in U.S. kicks into high gear as unemployment plunges to 6.3%. Wow, 6.3%. That's a great unemployment rate. And I'm not going to read through all the nonsense that they put out here, but let's look at this little snippet here on participation rate. The drop in the unemployment rate from March's 6.7% came as the agency's survey of households showed the labor force shrank by more than 800,000 in April. Wow. The participation rate, which indicates the share of working age people in the labor force, decreased to 62.8%, matching the lowest level since March 1978 from 63.2% a month earlier. Now listen to this. Reconciling such data in the context of stronger employment gains, presents a challenge to Fed policy makers as they try to determine when to begin raising interest rates. Central bankers at this week's meeting said the economy is showing signs of picking up and the job market is improving. The Fed's open market committee pared its monthly asset buying to $45 billion, its fourth straight $10 billion cut, and said further reductions in measured steps are likely. Now, wasn't half of that money mortgage-backed securities and half of it treasuries? So if that's still the case, and I don't know if it's the case, then we're talking about 25 billion a month that now the Fed is doing, and that comes to what, times 12, let's say $500 billion, but we're still doing about $1 trillion deficit. Where's that money going to come from? Tough question. Now, they mentioned interest rates. Let's take a look here. This is the monthly nearby euro dollars. This is a equivalent of the T-bill, which I don't have the chart for it. But this right here from 2009, that reminds me of a flat line on a heart patient monitor. Dead. I don't see any rates going up. In fact, when that news came out, I saw the 10-year move the other way. So I don't know what they're talking about. Now here's an article on that. More than 92 million Americans remain out of the labor force, and we're going to really dig into those numbers. The number of unemployed Americans decreased by 733,000 to 9.8 million last month. So the number of unemployed Americans is 9.8 million, but the number not in the labor force is 92 million. So it's only 10%. So that's crazy. Now, there's a CNS News article here, and it's kind of interesting because I couldn't find this covered anywhere else. It was referenced at Free Republic, but it was this article. The number of women 16 and older not in the labor force climbed to a record high of 55 million in April, according to data from the Bureau of Labor Statistics. This means that there were 55 million women 16 and older who were in the civilian, non-institutional population. Now that kind of raised a red flag for me, because let's see if I still have this. I don't have it, but I brought it up in Wikipedia, and the definition of the civilian non-institutional population is the population that does not include those in prisons, and that's about a couple million, those in mental institutions, and the best figures I could find was that's 1 million, 2 million, and also those who are in nursing homes, and that's a couple million. I did not know that they consider them institutional population. So just a rough guess, you can talk about 6 million more that are on that number. So we're talking more than 60 million, well, take half of it, roughly 60 million women not in the labor force. Now, let's look at this table that I found. This is the BLS, the Bureau of Lying Statisticians, and you can see here it starts with the total of the civilian non-institutional population at 245 million, and it went up a couple million this year. So the comparison is April of 2013 to March of 2014. So let's look at some of these numbers here. If we go down to that one that we were talking about, we're talking about women 16 years and over. You can see that the civilian non-institutional population of women and is 126 million. Now, to get total, I'm just talking about total people, and so we want to increase that. Of course, that's not kids. Everyone under 16 is not included as well. So we're going to add a few million more. Let's just say 130 million on top of that. And so how many are in the labor force? 72 million. So 72 million women are in the labor force. That's a 57% participation rate. So those are really bad numbers, and the number for men is a little bit better. You can see for men it's a 69% participation rate. But the thing is that we're talking about 130 million people here, and it's even higher when you're talking about the kids aren't counted. And these are all people that aren't working, so they're not adding anything to the economy. Now, let's think about how many of these people work for the government. Now, these are disputed figures, but this is an article I've cited before from Joseph Gitter. How many Americans work in government? Would you believe 40 million? And this is the statement here that kind of adds it together. When we add up the true size of the federal workforce, civil servants, postal workers, military personnel, contractors, grantees, bailed out businesses, state and local government, civil servants, teachers, firefighters, police officers, we reach the astonishing figure of nearly 40 million Americans employed in some way by government. That means that about 17% of the American labor pool 1 in every 6 workers owes its living to the taxpayer. So take that back and put those figures with these figures here, and take another 20 million off of here, and that's 50 million out of 130 million, or even higher. Then how many of those are what I would term non-productive employment, where they don't really increase the wealth of the nation? There's a lot of things, in my opinion, that don't do that. Psychological services. I don't know how many were included in that other figure, but we're already at a figure of 50 million. So, and the men as well. So we're looking at people in prison, people in institutions, people in nursing homes, people under 16, people not in the labor force. You may have as little as less than 100 million people in the country actually employed in some type of productive occupation where they actually add wealth to the country. And if you exclude services, which I don't even know what that figure is, but if you exclude service occupations, then the numbers are just absolutely frightening. So the labor situation is terrible. It's disastrous, and we're following the road that is already being followed in Europe. You can see that they're nearing civilizational collapse in places like Greece, where you're talking youth unemployment 60%, and it seems like the politicians in the United States want to follow the same course. Certainly with this labor farce that they've put out recently, it seems like they fully intend to do that. So I expect that this will turn down and will coincide with a catastrophic collapse. Who knows how many will be left in labor markets when that happens. So let's get over to the gold chart. I wanted to look at that one real briefly because it's still a lot healthier than the silver chart. You can see, though, it is moving towards some type of resolution here on this MACD. That's very important because silver is going to follow gold. I don't have any doubts about it. It's always happened. It's definitely the most manipulated. But if we draw in, let's just draw in a rough trend channel. It's going to be hard to get a parallel one here, but something like this maybe. And then another trend line would be something like this maybe. So the question is, when you look at this chart, is this a bear market or is this a bull market? It still looks like a bull market to me. For this to look like a bear market to me, we would have to take this out, bounce off this right here at about 1,000, and then continue down, and that would convince me that this is actually a bear market. As far as I can tell, though, this is still a bull market, and it may be, if I'm right about the timing on the silver smackdown, which I still believe is going to happen, even though we did get that bounce. We got a bounce again, but I do believe that they want to take it down and eventually put it down to around 15. I may be wrong. There may be enough buyers, real buyers, coming in. I can't imagine where they're buying. They'd have to be in London. They certainly couldn't be on the COMEX after what happened with MF Global and all the shenanigans that go on in the U.S. markets. I can't imagine any rational person trying to buy paper silver and actually think that they're not going to get ripped off. So maybe there are people coming in at this point, but I'm still keeping some powder dry myself and looking for that $15 price that we may get and then take off to the moon from there. And we'll talk to you next time.